Welcome back to Boni's Life, where we don't just follow the crypto markets, we anticipate them. I'm your host, Boni, and today we're diving deep into what might be the most exciting hunting ground for crypto investors. Top 10 low cap crypto gems with 100x potential in 2025. A low cap cryptocurrency typically has a market capitalization under $150 million. That's the total value of all its tokens in circulation. To put that in perspective, that's less than 0.1% of Bitcoin's market cap. And when we talk about 100x potential, we're looking at projects that could multiply your investment by 100 times. That $1,000 investment becoming $100,000. We've evaluated hundreds of projects based on 4 critical criteria. First, technological innovation. Is the project solving real problems with novel approaches? Second, team quality. Who's building this? And do they have the expertise to deliver? Third, market potential. Is there a substantial addressable market for this solution? And fourth, tokenomics. Does the token have a sustainable economic model that benefits holders? So whether you're a seasoned crypto investor looking for the next asymmetric bet, or you're just curious about where this technology is headed, this episode is designed to give you the intellectual ammunition to make informed decisions. Before we dive in, I need to emphasize that this is educational content, not financial advice. Low-cap cryptocurrencies are extremely high-risk investments. Never invest more than you can afford to lose. And always do your own research beyond what you hear in this episode. Now, let's cut through the noise and discover the signal. The top 10 low-cap crypto gems with genuine 100x potential in 2025. The DeFi revolution began around 2020 with promises of banking the unbanked and creating a truly open financial system. But what followed was often a cycle of hype, unsustainable yields, and inevitable crashes. But here's what's fascinating. While the speculative froth has been blown away, the real innovation has continued quietly in the background. Today's DeFi disruptors aren't chasing 1,000% APYs. They're building sustainable financial infrastructure that solves real problems. Let's meet our first category of low-cap gems, the DeFi disruptors who could reshape finance as we know it. First up is KU Jira, trading under the ticker KUJI. With a market cap under $100 million, this project is building what I call DeFi for grown-ups on the Cosmos ecosystem. What makes KU Jira special is its focus on sustainable DeFi tools rather than inflationary token rewards. Its flagship product, Orcha, is a decentralized liquidation engine that offers better prices for both borrowers and liquidators, a win-win that traditional liquidation mechanisms don't provide. The other key product, FIN, is an on-chain order book, DEX, with no gas fees for traders. Think about that. The precision of a centralized exchange order book with the security of decentralized custody. But here's where it gets really interesting for investors. Unlike most tokens that are purely speculative, KUJI shares actual revenue with holders. When the protocol generates fees, a portion flows directly to stakers. That's real yield, not inflationary rewards that dilute everyone over time. The risks? Cosmos ecosystem projects often don't get the same attention as Ethereum or Solana. And with DeFi regulation looming, any protocol could face compliance challenges, but KU Jira's community-first approach and sustainable economics make it a standout in the DeFi space. Our second DeFi disruptor tackles one of blockchain's biggest challenges, fragmentation. CLR Network, trading as CLR with an $81 million market cap, is a layer 2 scaling and interoperability protocol. In simpler terms, it helps different blockchains talk to each other and makes transactions faster and cheaper. Their flagship product, C-Bridge, has processed billions in cross-chain transfers and connects over 40 different blockchains. Imagine being able to move assets from Ethereum to Solana to Avalanche seamlessly. That's what CLR enables. What impresses me about CLR is their technical approach. Rather than creating yet another blockchain, they've built infrastructure that makes existing chains work better together. Their interchain messaging framework allows developers to build applications that work across multiple blockchains without having to learn each chain-specific code. The numbers speak for themselves. Transaction volume has grown exponentially, and major projects like PancakeSwap have integrated CLR for their cross-chain functionality. The risks? Interoperability is a crowded field with competitors like Layer 0 and Axelar, and cross-chain bridges have been targets for some of the largest hacks in crypto history. But CLR's technical excellence and growing adoption make it a compelling investment case. Our third DeFi disruptor takes a completely different approach, embracing regulation rather than avoiding it. Swarm markets, trading as SMT with just a $17 million market cap, is one of the first regulated DeFi platforms focused on tokenizing and trading real-world assets. What makes Swarm unique is its BaFin license. That's the German Financial Regulatory Authority. This gives them the ability to offer compliant trading of tokenized securities and other assets that most DeFi platforms legally cannot touch. Imagine being able to trade fractional ownership in real estate, fine art, or private equity, all on a decentralized platform with the security of regulatory oversight. That's the vision Swarm is building toward. The SMT token is used for governance, fee discounts, and staking to secure the network. As trading volume grows on the platform, token holders benefit from both utility value and potential governance rewards. The risks? Regulatory compliance means slower development compared to unregulated DeFi. And tokenizing real-world assets has proven challenging for many projects. But if Swarm can execute on its vision, it could bridge the multi-trillion-dollar traditional asset market with DeFi liquidity. These DeFi disruptors show us that the future of finance isn't just about speculative trading. It's about building sustainable, useful, and compliant financial infrastructure that solves real problems. Now let's explore the projects building the very backbone of tomorrow's crypto ecosystem, our infrastructure innovators. While DeFi might capture the headlines, it's the infrastructure layer that truly determines what's possible in the crypto ecosystem. Think of these projects as the roads, bridges, and power lines of the digital economy. They're not always glamorous, but absolutely essential. The most successful infrastructure projects solve fundamental problems that limit blockchain adoption: scalability, interoperability, energy efficiency, and developer experience. Our next three gems are tackling these challenges head-on, with innovative approaches that could reshape the entire industry. Let's meet our infrastructure innovators, the projects building the backbone of tomorrow's crypto ecosystem. First in this category is Ori Chain, trading as Ori with a market cap under $50 million as of early 2025. This project is at the intersection of two of the most powerful technological trends of our time: artificial intelligence and blockchain. Ori Chain is pioneering what they call AI oracles, systems that connect smart contracts to AI APIs and models. This might sound technical, but the implications are profound. Think about smart contracts that can access real-time AI analysis of market sentiment, image recognition for NFT verification, or natural language processing for automated content moderation. Traditional smart contracts can only work with deterministic data. Ori Chain expands what's possible by orders of magnitude. The AI marketplace allows developers to buy, sell, and monetize AI models and data sets in a decentralized environment. It's essentially creating an economy around AI capabilities, something that could be enormously valuable as AI continues to evolve. What's particularly impressive is Ori Chain's cross-chain compatibility. It works with Ethereum, BNB Chain, Cosmos, and several other major ecosystems, maximizing its potential reach and utility. The risks? AI is certainly a hot narrative, and many projects claim AI integration without delivering substance. But Ori Chain has been building since 2021 with real technical implementations rather than just marketing hype. The challenge will be maintaining their technical edge in the rapidly evolving AI landscape. Our second infrastructure innovator is tackling a different fundamental challenge, creating a more efficient and scalable foundation for decentralized applications. Taraxa, trading as Tara with a market cap of $61 million, is an EVM-compatible smart contract platform that utilizes something called a block DAG, that's directed acyclic graph, for Web3 applications. Unlike traditional blockchains that process transactions in sequential blocks, Taraxa's block DAG allows for parallel processing, significantly improving throughput and reducing latency. Yet it maintains EVM compatibility, meaning developers can easily port their Ethereum applications to Taraxa with minimal changes. What excites me about Taraxa is their focus on practical applications beyond just DeFi. They're targeting supply chain tracking, IoT device coordination, and informal agreement tracking, real-world problems that blockchain is uniquely positioned to solve. With a technology score of 81% according to independent evaluations, Taraxa's technical foundation is solid. Their testnet has demonstrated transaction speeds that far exceed Ethereum's base layer, while maintaining the security and decentralization we expect from a public blockchain. The risks? Competition in the Layer 1 space is fierce, with dozens of projects claiming to be the next Ethereum. Taraxa will need to not only deliver on technical promises, but also attract a critical mass of developers and users. However, their focus on specific use cases rather than trying to be everything to everyone could be a winning strategy. Our third infrastructure innovator takes a unique approach to one of blockchain's most persistent criticisms: energy consumption. Alephium, trading as ALPH with a market cap around $40 million, is a sharded blockchain that uses what they call proof of less work, a novel consensus mechanism that maintains the security of proof of work while dramatically reducing energy requirements. Alephium combines sharding, dividing the network into parallel processing units, with their energy-efficient consensus mechanism. This allows them to achieve high throughput without sacrificing decentralization or security, the usual trade-offs in blockchain design. What's particularly impressive is their developer experience. Alephium has created a programming language called Ralph that's designed to be more secure by default, reducing the risk of the smart contract vulnerabilities that have led to billions in losses across the industry. With a technology score of 85% and a projected ROI potential of 90x, according to several independent analysts, Alephium represents one of the most technically sound investments in the low-cap infrastructure space. The risks? As with any new programming language and environment, adoption takes time. Developers are already spread thin across many competing ecosystems. But Alephium's technical advantages and focus on sustainability could attract projects that are increasingly conscious of their environmental impact. These infrastructure innovators may not generate the same excitement as the latest meme coin, but they're solving the fundamental problems that will determine which blockchain ecosystems thrive in the long run. Sometimes the most valuable investments are in the picks and shovels, not the gold itself. Now let's explore the projects bringing blockchain technology into the physical world, our real-world utility pioneers. One of the most exciting developments in crypto is the growing bridge between digital tokens and the physical world. While speculation drives much of the market, these next projects are focused on solving tangible, real-world problems. The most powerful blockchain use cases often emerge when we connect digital scarcity and transparency to physical assets and activities. Our next two gems are pioneering this frontier, creating new economic models that simply weren't possible before blockchain technology. Let's meet our real-world utility pioneers, projects bringing crypto benefits into everyday life. First in this category is Demo, trading under the ticker Demo with a market cap of just $24.38 million as of early 2025. This project is revolutionizing how we think about vehicle data ownership. Every modern vehicle generates enormous amounts of valuable data: driving patterns, maintenance needs, location history, and more. Traditionally, this data is controlled by manufacturers who monetize it without sharing the benefits with vehicle owners. Demo flips this model on its head. Users connect their cars through hardware devices or software integrations, enabling data collection on metrics like mileage, location, and diagnostics. But here's the key difference. The vehicle owners maintain control of this data and earn Demo tokens as rewards for sharing it. The potential market here is massive. There are over 1 billion vehicles worldwide, and the automotive data market is projected to be worth over $400 billion by 2030. Demo is positioning itself as the decentralized layer that gives control back to consumers in this growing market. What's particularly promising is Demo's growing ecosystem of partnerships with developers building applications on top of this vehicle data infrastructure. From insurance products to maintenance marketplaces, these applications create real utility for the DIMO network. The risks, hardware distribution, and adoption can be challenging, and Demo faces competition from both traditional manufacturers and other blockchain projects. But their focus on user ownership and control aligns perfectly with the ethos of Web3, potentially giving them an edge as consumers become more privacy conscious. Our second real-world utility pioneer is taking on one of the world's most valuable data monopolies, digital mapping. Hive Mapper, trading as Honey with a market cap of $138.46 million, is building a decentralized mapping network that rewards contributors with crypto for collecting street-level imagery using dashcams. Think of it as a decentralized Google Street View, where instead of Google owning all the mapping data, it's created and owned by a network of contributors who are compensated for their work through the Honey token. The growth has been impressive. Hive Mapper has already mapped millions of miles across dozens of countries, with coverage expanding daily as more contributors join the network. And unlike centralized mapping services that update infrequently, Hive Mapper's crowdsourced approach means maps can be continuously refreshed. The Honey token is central to the ecosystem's economics. It's used to compensate contributors and is required to access Hive Mapper's map data, establishing a direct link between contributor incentives and network utility. As more businesses and developers pay to access this mapping data, token holders benefit from the network's growth. The risks? Building a mapping network with coverage comparable to Google or Apple requires massive scale, and there are technical challenges in ensuring data quality from diverse contributors. However, Hivemapper's approach dramatically reduces the cost of data collection compared to traditional methods, potentially giving them a sustainable competitive advantage. These real-world utility pioneers demonstrate how blockchain technology can reshape industries by aligning incentives between users, data creators, and applications. By tokenizing valuable real-world activities, they're creating new economic models that distribute value more equitably than traditional approaches. Now, let's explore our final category, like projects transforming how we create and consume content and entertainment, our content and entertainment revolutionaries. Content creation and entertainment represent some of the most exciting applications of blockchain technology. These industries are ripe for disruption, with centralized platforms often taking excessive control and profits from creators. The global content and entertainment industry is worth trillions, yet creators typically receive only a small fraction of the value they generate. Our next two gems are building decentralized alternatives that could fundamentally reshape how content is created, distributed, and monetized. Let's meet our content and entertainment revolutionaries, projects empowering creators and gamers in the Web3 era. First in this category is JoyStream, trading as Joy with a market cap under $40 million as of early 2025. This project is building a decentralized video platform that gives creators full control over their content monetization and audience relationships. Unlike YouTube or Twitch, where the platform sets the rules and takes a significant cut, JoyStream is built on its own blockchain and governed by a DAO, a decentralized autonomous organization. This means the users and creators themselves control the platform's rules and economics. What's particularly innovative about JoyStream is its support for multiple interoperable dApps. Any video uploaded on one app is accessible across the network, creating an open ecosystem rather than a walled garden. This interoperability could be a game changer for content discovery and creator monetization. The Joy token is central to the platform's governance and economics. Token holders can vote on platform rules, feature development, and even content moderation policies. This creates a direct alignment between the platform's success and token value, something missing in traditional content platforms. Despite being relatively unknown in mainstream circles, JoyStream has been steadily growing its content library and creator base. Their working mainnet, active DAO, and growing content library demonstrate real progress beyond just white paper promises. The risks? Content platforms face the classic chicken and egg problem. Creators want audiences, and audiences want content. Building critical mass against established giants like YouTube is an enormous challenge. However, as concerns around censorship and creator compensation grow, JoyStream's decentralized model could attract those seeking alternatives. Our final low-cap gem is tackling one of the most promising applications of blockchain technology: gaming. Mythos, trading as Myth with a market cap around $80 million, isn't just another GameFi project. Instead of creating a single game, they're building the underlying infrastructure to power an entire ecosystem of blockchain games. Co-founded with input from industry veterans, including Epic Games contributors, Mythos is creating a decentralized game publishing platform with cross-chain NFT support. Think of it as the Unity or Unreal Engine of Web3, except tokenized, open, and decentralized. What's particularly promising is their dual approach to partnerships, working with both established Web2 gaming companies looking to enter Web3 and native crypto teams building from the ground up. This bridges the quality gap that has plagued many blockchain games. The Myth token serves multiple functions in the ecosystem: governance rights, staking rewards, and access to exclusive features and launches. As the platform grows, token holders benefit from the expansion of the entire ecosystem rather than just a single game's success. The risks? GameFi has seen its share of boom and bust cycles, with many projects failing to deliver sustainable gameplay beyond initial hype. However, Mythos is betting on long-term infrastructure rather than short-term token incentives, potentially positioning them to capture value as the space matures toward mainstream quality gaming experiences. These content and entertainment revolutionaries represent a fundamental shift in how value is distributed in creative industries. By giving more control and economic upside to creators and users, they're building models that could eventually challenge the tech giants that currently dominate these spaces. Now that we've explored all 10 of our low-cap gems, let's discuss how to approach these opportunities strategically and responsibly. We've explored 10 fascinating projects across 4 categories, each with genuine potential for significant growth. But potential doesn't automatically translate to profit. Let's discuss how to approach these opportunities strategically. When it comes to low-cap crypto investments, position sizing is absolutely critical. Even the most promising projects carry substantial risk, so proper allocation is your first line of defense. A prudent approach is to allocate no more than 5 to 10% of your total crypto portfolio to low-cap gems. Within that allocation, consider diversifying across multiple projects rather than concentrating in just one or two. This helps manage the inherent volatility and risk. Remember that in this segment of the market, many projects will fail completely. That's simply the reality of early-stage technology investments. The winners need to perform exceptionally well to compensate for the losers in your portfolio. Time horizon is another crucial consideration. The 100x returns we discussed don't happen overnight. The most successful crypto investors I know have held their positions through multiple market cycles, often for years. Patience is truly a competitive advantage in this space. And please don't take my word as gospel. This episode should be the beginning of your research journey, not the end. Before investing in any project, dive deep into their documentation, join their community channels, and evaluate their technical progress firsthand. Once you've invested, establish clear monitoring criteria. What developments would strengthen your conviction? What red flags would cause you to reconsider? Having these guidelines in place helps remove emotion from your decision-making process. The projects we've discussed today represent different visions of how blockchain technology might reshape our world. From financial infrastructure to content creation to real-world data ownership, what unites them is a focus on solving genuine problems rather than simply chasing the latest trend. Whether it's Kujira's sustainable DeFi approach, Ori Chain's AI blockchain integration, Demo's vehicle data ownership, or Joystream's creator-first content platform, each of these projects is pushing the boundaries of what's possible with decentralized technology. Will all of them succeed? Almost certainly not. The path from promising low-cap project to established crypto player is fraught with challenges: technical, regulatory, and competitive. But for those that navigate these waters successfully, the potential upside is enormous. What fascinates me most about these projects isn't just their investment potential. It's how they're reimagining the relationship between technology, value, and human coordination. They represent experiments in new economic models that simply weren't possible before blockchain technology. What do you think? Which of these projects caught your attention? Are there other low-cap gems you're watching closely? Let me know in the comments below. And if you found this analysis valuable, make sure to hit that subscribe button and notification bell